I have the pleasure of introducing our first speaker, Mr. Kelly Bird. He is the country director for the Philippines. He is appointed to the position in 2018. Prior to this assignment, he was the director of the Public Management, Financial Sector and Trade Division in the Southeast Asia Department of the Asian Development Bank. And prior to joining ADB in 2006, he worked as part of the US aid-funded project with the Indonesian government from 1999 to 2005. In 2006, he was a consultant on trade policy with the World Bank in Jakarta, and he graduated with a PhD in economics from the Australian National University in 1999. He has published several papers in international journals, including Applied Economic Letters, Bulletin of Indonesian Studies, Journal of Development Studies, Oxford Development Studies, Southeast Asian Affairs, World Economic and World Development. Mr. Kelly Bird, it's a pleasure to have you with us today. I'm looking much forward to your presentations and your outlook for the Philippines for 2022.
Thank you very much, Jesper, and thank you for inviting me to talk to the chambers and the private sector today. So it's very much my pleasure. If you can upload the PowerPoint presentation, I have about 20 slides. And if we go to the next slide, I'd like to, in my talk today, I'll provide an update on the Philippines macroeconomic update. I'd also want to talk about sort of the latest data on the pandemic, particularly the positive cases and the government's rollout of its vaccine program. This is important because it anchors a restoration in business and consumer confidence and economic recovery. And then I'd like to spend a few minutes talking about the Asian Development Bank's lending program here in the Philippines for 2022, particularly focusing on infrastructure, climate change, and some of our post-COVID recovery programs. So we turn to the next slide. The key messages for my presentation today, the kind of the four takeaways are listed here. We project or estimate economic growth for 2021 at least at 5.1%. We upgraded our projections in December from an earlier 4.5%, and clearly there is a strong momentum occurring in the economic recovery towards the end of last year. We also upgraded our projection for this year from 5.5% now to 6% of GDP. And the growth drivers for this recovery is, clearly the government is running an accommodative fiscal policy. Still, they will continue to run significant national government budget deficits, and monetary policy is also being very accommodative, and interest rates, after you adjust for inflation, are negative. The other kind of key driver of the recovery is the government's sustained public spending in infrastructure, where it reached about 5.1% last year, and it's going to be close to 6% of GDP this year. Relaxation in mobility restrictions, and particularly in the national capital in the fourth quarter of last year, really did help to boost growth. We're currently at level 3 now, up from level 2, and that will pose a slight drag on growth in the first quarter of this year. Critical to the recovery is the national government's vaccination program. This is going to be crucial for restoring consumer and business confidence. And if we look at, and I'll present some numbers later on in the presentation, but a lot of progress has been made in vaccinating the population. And this is certainly is helping to provide a good foundation for recovery in 2022. There are downside risks, and the major one for the Philippines right now is the spread of Omicron. Obviously, it's led to an increase in restrictions from level 2 to level 3 in Metro Manila. But I think just as important, it's affected some confidence. Less people are actually, even with level 3, less people are going out to restaurants and so on. So that's going to have a drag on the retail sector. But because it's highly contagious, it's leading to unprecedented rates of sickness and absenteeism in the workplace, and that's going to disrupt services and supply chains at least for the next 6 to 8 weeks. And we've seen this in many other countries, including the UK, Europe, and most recently Australia. So we expect the same will ultimately occur here in the Philippines as well. The big development challenge that we see facing the Philippines is really about the COVID-induced medium to long-term negative impacts on employment. And this will require continued support to firms and workers impacted by a transition that's occurring now. And I'll talk a little bit more about that later in the presentation. But these are the 4 kind of key messages and key themes I'd like to talk about today. If we turn to the next slide. This picture shows the demand side contributions to GDP growth on a quarterly basis. It's year on year, and it's broken down into the different components of GDP: household consumption, private investment, government consumption, and net exports. As we all know, the economy contracted in the second quarter of 2020 by 17%. And overall for 2020, the economy contracted by 9.6%, which was an unprecedented decline in GDP. But we saw quite a good rebound in the second and third quarters. And essentially, that 12% rebound in the second quarter of last year was equivalent to about a 70% recovery in lost GDP the year earlier. So we see with this, and we do expect quarter 4 to come in at a significantly high growth rate, and as a result of this, we're upgraded our growth projections for 2021. But if you see from this figure, there's been a strong recovery in investment and household consumption, but also government spending has supported the recovery, particularly in the third quarter of last year. Return to the next slide. These are our projections. As everyone knows, from 2015 to 2019, the economy was growing on average about 6.3, 6.4% per annum. We do project that the economy will grow around 6% this year. And in 2023, start to return to its longer term growth rate of around 6.3%. With the growth of 6% this year, we expect the Philippine economy to have fully recovered to its pre-pandemic or 2019 level of GDP. And we expect that to occur around the fourth quarter of this year. But in terms of per capita income, we don't expect a full recovery until 2023. I mentioned the drivers. There's been the government continues an expansionary fiscal policy. The budget spending for this year is estimated at around 11% growth. And significant to that spending will be the government's infrastructure program. So last year, as I mentioned, public spending on infrastructure was it's estimated to be around 5.1% of GDP. This year, the budget equivalent is around 5.8% of GDP. So that's going to be a strong stimulus for economic growth this year. Again, private investment is picking up. If I turn to the next slide, I want to, for the next 2-3 slides, I want to just touch on some microeconomic indicators. What these show is that, the recovery, particularly in the third and fourth quarter of this year, started to show that it's on a more stable footing. So getting a bit more steady, and that bodes well for the recovery in 2022. If we look at the top two graphs, many of you will be familiar with the Purchasing Managers Index for manufacturing. If it's above 50%, it means purchasing in the sector is expanding. If it's below 50%, it means it's contracting. What we've seen in the last 3 or 4 months is that it's been consistently expanding, and that expansion rate's been increasing. So that really does tell us that there's a good momentum in the recovery. Even for the retail sector, for the first time in 2 years, it's actually expanded. If we look at the bottom two graphs, manufacturing capacity, utilization rate, it's inching up, so it is improving, although there is still significant unutilized capacity in the economy. And in a way, this will be a drag on private investment in manufacturing, simply because there's still a lot of excess capacity. If we turn to the next slide, some of these figures, if we look at the bottom one, the bottom two figures, external trade has rebounded fairly quickly in 2021. So exports have been growing just under an average of 20%, and imports are much higher. So that shows a recovery in the global economy, but also a recovery in the demand side in the Philippines through the increase in imports. We've also seen lending to businesses now on a year-on-year basis has turned into positive territory since June of this year. For the preceding 6 months, lending to businesses were in negative, so it was declining on a growth basis, but it's now starting to pick up as well. So that's also a good sign that the recovery, while still fragile, is getting on a more stable footing. Remittances this year have been growing relatively strong, just over 5% on an annual basis, and that's helped to. And those remittances are generally $30 billion plus coming into the economy, and that's helping to stimulate household spending. And we also see that shown up in items like vehicle sales, which in the last few months of the year started to improve significantly. If I turn to the next slide, this is data from Google, where they are able to provide data that reflects mobility, and we're just looking at, and they have a number of different kind of indicators. The ones that we're showing here is the mobility around leaving homes, and the bottom figure is about people's movement towards the retail, to shops and recreation. What I want to look at is the bottom graph. In April of 2020, mobility, in terms of people visiting retail sector and recreation, obviously slumped 80% because of the lockdown. Throughout 2020 and for most of 2021, it had a steady improvement, but it was still significantly below pre-pandemic levels. So even by July of last year, it was still about 40% below pre-pandemic levels in terms of individuals visiting retail and recreation areas. A lot of it was a function of changes in the level of restrictions on mobility in NCR. But if you look at towards the end of 2021, after they moved from level 3 to level 2, we saw a big increase in mobility. In fact, by December, the mobility, the movement of people to and from retail and recreation centers actually exceeded pre-pandemic levels. So there was quite a good surge in consumer spending, particularly late November and for much of December. In January, that mobility's slipped again. Partly, a typical pattern is mobility does drop in the first week of January after the holidays, but also the movement from level 2 to 3 and the rapid spread of Omicron had reduced mobility. But I think that kind of the message there is that, you know, once you do move to level 2, you do get a surge in people moving around. And that's it also reflects a surge in household spending as well. And so when you look at all this data for November and December, we do expect the GDP numbers for the fourth quarter of last year to be very good. If we turn to the next slide, I want to talk about the development impact. The top figure shows the unemployment rate as a percentage of the labor force, and the bottom figure shows the numbers of jobs or workers, both in the formal sector and the informal. And the formal sector is defined as workers in private establishments in government, and the informal sector is defined as those who are in self-employment or household work or unpaid work, etc. So they're the more unstable, precarious jobs. What we've seen prior to the pandemic, a continuous trend in a declining unemployment rate and quite a surge in wage employment in the formal sector. And that reflected the high economic growth rate in the economy. And in fact, during this period of 2016, particularly 2017 to 2019, we had rapid growth in wage employment and decline in absolute numbers in the informal sector. So there was a shift away from the informal sector employment to the formal sector. And the formal sector, you know, they offer more stable jobs, higher wages, access to social protection, access to training. So they are better quality jobs. Unfortunately, with the pandemic and the slower economic recovery, we've seen a reversal in those trends. So formal employment is struggling to recover, and there's been a shift. So there's been job destruction in the formal sector. In fact, there's been 500,000 wage jobs in the private sector or private establishments lost over the last 12 months. And we've seen a shift of the labor force towards the informal sector. What we're concerned is that this may persist over the medium to long term. And you can see, from that bottom figure that formal employment is not only has it lost jobs, it's also way off its long-term trend. If we turn to the next slide, if we look at it by economic sector, so this is employment numbers in 2021 over early 2020. What we observe from here is quite a massive sectorial reallocation of jobs away from those sectors which heavily are dependent on personal contact, such as accommodation, food services, transportation, towards those sectors that are higher skilled, more dependent on IT, and where remote working is easier. So we've got this massive sectorial reallocation. Now, as the economy recovers, this will improve, but I think this picture might persist for some time. But what it also means is that we expect to see an increase in the skills mismatch. As for workers, it's not so easy to transition between sectors. So we're going to see a more persistently higher unemployment rate, and some sectors are going to have skill shortages, while other sectors will be losing jobs. And there's a number of reasons this will occur. One is, businesses are going to move towards more digitalizing their work practices as much as they can. Those sectors that can move towards automation, that was a process that was occurring before the pandemic. That's likely to accelerate. For those that have lost their jobs, or who have had disruptions in schooling or job training, there's going to be skill erosion. And so those workers who are not in jobs will, and for those who are spending longer periods in unemployment, they lose their skills and they become less employable. And that means that the unemployment rate will persist above trend for some time, but it also lowers the potential capacity of the economy as well. So this is a medium long-term concern for the economy. What this highlights, though, is that the importance of workplace skills development schemes and TVET training to help young people and workers to retrain. And we'll talk a little bit about some initiatives that ADB is doing with the Philippines. If I turn to the next slide, this is a similar picture, but it looks at gross domestic product by sector. Again, we're seeing a contraction, persistent contraction in the accommodation, transport, and other services, but we've seen growth in the IT professional business services. So again, we're seeing this massive sectorial shift in GDP, which of course reflects what's happening to employment. This of course highlights the importance of implementing investment climate reforms to attract both domestic and foreign investment to lift economic growth potential. We've seen the government has recently enacted the retail liberalization bill, and we've also seen good progress being made in Congress in deliberating the two other important legislation, such as the Public Services Act and the Foreign Investment Act. Once those two acts are passed by Congress and signed into law, then I think that's going to help improve the foundations for the investment climate and should be a game changer for further investment, particularly foreign investment over the longer term. If I turn to the next slide, I want to now just focus on some of the numbers in COVID. The slide, the graph on the left-hand side, that shows weekly positive COVID cases from the beginning of the pandemic until now. And you can see that we've had these kind of now fourth waves. The third wave back in August, September of last year, it reached a peak of about 120,000 cases weekly. We've seen we saw a rapid drop-off in positive cases. And in fact, most of you know that in December, they were recording about 300 positive cases on a daily basis. So it was incredibly low. And then end of December, early January, we had this incredible spike in COVID cases, most likely because of Omicron. The right-hand side is just shows the weekly cases for the National Capital Territory. As you can see, it was peaking, it's starting to peak around 15,000 cases on a daily basis here in NCR. So we've had this tremendous spread of most likely the Omicron virus at the beginning of this year, which kind of dwarfs previous outbreaks of COVID. If we turn to the next slide, what we see though is that, so this picture shows the weekly death rates by COVID, again, from the beginning of the pandemic until now. In that third wave in September, October of last year, the weekly deaths peaked at 2,000. But again, it dropped incredibly fast. Typically, the death rate numbers lag by about a month from the positive cases. So we do expect those death rates to start to increase in February. But even so, they still remain low. Hospitalization rates still remain lower than what they were under the previous wave in September. The death rates are looking like they are going to be much lower than what they were in the previous waves of COVID. So this particular outbreak is quite different, or at least the tentative evidence and data shows that it is, while it's spreading much faster than the earlier waves of COVID outbreak, the impact that it has on hospitalizations and death seem to be much lower. And this is the evidence that's coming from North American, European countries as well. So, according to DOH data, almost 98% of those who have caught COVID in this wave, either they are experiencing no symptoms or mild symptoms. So we do hope that this is kind of like the beginning of the end of the pandemic, at least keeping our fingers crossed, that this is much more muted severity on those who do catch COVID. If we turn to the next slide, I just want to talk about vaccination numbers. The drop-off in cases in December and the drop-off in the death cases are clearly related to the government's vaccination program. On the right-hand side, we've got a table that shows the monthly numbers of and the daily numbers of vaccines that were administered. By November, December, they were getting close to 1 million doses administered on a daily basis. So November and December, we had about 49 million doses administered. So currently, the numbers are 108 million doses have been administered by the end of December. You can see that this is the government's vaccine procurement program. They have contracted up to 210 million doses. The private sector's played an important role in financing vaccines, about almost 10 million. Local governments, about 13 million. And also the development partners. For ADB, we co-financed with the Asian Infrastructure Investment Bank through our vaccine loans to the Philippines, and that's procuring around 85 million doses from Sinovac and Pfizer. And most of these doses have been delivered to the Philippines as of last year. If we turn to the next slide, this just gives the numbers of persons that are vaccinated as of the 4th of January. In the Philippines, almost 62 million persons have had at least one dose of the vaccine. That's about 55% of the entire population of 111 million Filipinos. Around 52 million have been fully vaccinated. So that's just under half of the Philippine population that's been vaccinated. You can see across regions in Metro Manila, 75% of the entire population has been fully vaccinated. So those rates are very high. A lot of the other regions are catching up. In November and December, the government's program has been to focus on vaccinations outside the National Capital Region. So there has been a significant catch up, but the rates also vary. And what's quite concerning is in BAM, for example, only 15% of the entire population has been vaccinated. And still some other regions, less than 40% of the populations have been vaccinated. But the government's intention is to ensure that somewhere around 70% of the entire population has been vaccinated by the second quarter, by May of this year. I do expect that they'll reach those targets. We turn to the next slide. I want to just now quickly talk about what ADB is doing this year. The figure on the left-hand side shows ADB lending from 2015 to 2021 and our estimate for 2022. For those who are not so familiar with ADB, we lend to the government either on a project basis, so financing infrastructure or social protection projects, or we lend on policy reforms. And that's funding that goes to the national budget. Up until 2018, ADB typically lent around $700 million annually to the Philippines. That increased to $2.5 billion in 2019, partly in response to ADB's support to the government's infrastructure development program, Build, Build, Build. In 2020, we lent the government $4.2 billion, which was the highest in ADB among all of our member countries. A good portion of that was our COVID response assistance to the Philippines, both in terms of budget support, but also financing emergency grants to vulnerable families, and also in supporting scaling up the government's health response. Last year, we lent the government around $2.2 billion. About 600 million of that was through financing the procurement of vaccines, both Sinovac and Pfizer. This year, we're looking at around $3 billion in lending. I know I'll talk a little bit about it in the moment. The pie chart on the right-hand side shows ADB's portfolio of our active loans. Half of it is in the transport sector, so that's supporting the government's Build, Build, Build program. But we also scaled up our education and particularly our health programs. We had actually been out of the health sector since 2007. And through the pandemic, we re-entered into the health sector, and our portfolio in that sector has increased significantly. If I turn to the next slide, just a selection on what we're doing for 2022. So we're looking at about $3 billion in indicative lending, and that's going to be focusing on infrastructure. We're also shifting towards financing of climate change reforms, but also focusing on post-COVID recovery and skills development. So they're the four themes that we're focusing on this year. And here's a selection of projects. We're in the final stages of preparing the South Commuter Railway project. And that'll be the railway line from Manila to Colombo. It's an elevated railway project. We're also in the final stages of preparing for the Davao Modern Bus project. And that's introducing a new modern bus system that would gradually replace some of the jeepneys and smaller units. We're also focusing on a climate change action policy reform program with the Philippines. And this is really designed to help support the government meet its commitments under COP26. We're also focusing on a TVET program, and also a post-COVID business and employment recovery program, which is really supporting government reforms and investments in the employment and skills training sectors. If we turn to the next slide, this is a picture of our infrastructure programs in infrastructure projects in the Greater Metro Manila area. I just wanted to provide you with an update. Our infrastructure programs or projects with the government is designed to support the government with an integrated transport investment, and it's really designed for helping to decongest Metro Manila, but also help promote economic development outside Metro Manila, going up further north and further south, but particularly further north over the longer term. So, if you do invest in good infrastructure, population will shift to those areas over the longer term. So our first project that we had approved in 2019 is our Malolos-Clark Railway project, and that's a $2.8 billion project. And that that's co-financed with JICA, with the government of Japan, and that's building a modern railway line from Clark International Airport to Malolos, just north of Manila. The government of Japan is building the line from Malolos to Blumentritt. And this year, we are now looking at approving the South Commuter Railway project, which is from Manila down to Colombo. And that'll be approximately a $4.3 billion project. What we expect with this seamless railway line, by 2040, we expect 1 million rides per day going along this line. In 2020, we also approved the Angat Dam water transmission project, and that's a 15-kilometer water transmission line, which is helping to expand the capacity and also expand resilience in the water system for Manila. Also in 2020, we approved the EDSA Greenways project, which is a 6.5, it's a series of elevated walkways along EDSA. It's about 6.5 kilometers. And it really is about linking all the different public transport stations and modes and ensure kind of a safe walking experience for those pedestrians. Last year, we approved our Metro Manila Bridges project, which is going to be constructing 3 bridges to help decongest those particular areas. We are now in the design stage of our 3 other transformative projects. So our MRT4 line, that's the Metro Rail Transit Line 4, which is from Ortigas to Rizal Province. That design contract was awarded by the Department of Transportation to a Spanish firm, and that design has started. Our Laguna Lake Transport Road project, which is going to build a 30-kilometer expressway along the lakeshore. That design contract was awarded to a international and domestic consortium a few months ago. And so the design for that project has started. And both of these projects, the MRT Line 4 and the Laguna Transport, are indicatively planned for approval in 2023. And then the Bataan Cavite Bridge project of the Department of Public Works and Highways, that was approved by the ICC a couple of years back, and the design for that was approved in early 2021. And that's about 20 or 30% completed in terms of a design. And that'll be a 30-kilometer bridge that would link the provinces of Bataan and Cavite. And again, we have that tentatively scheduled for approval in 2023. So these are our major transformative projects in Metro Manila. Some of them have already been approved. Others are now in their advanced design stages. If I turn to the next slide, this is my last slide. I just wanted to talk about a new initiative that ADB is developing in collaboration with the Department of Trade and Industry, the Department of Tourism, and the Department of Labor and Employment, but also it will be with the private sector. As I mentioned earlier, with the mismatch of skills that's going to emerge because of the transitions and the adjustments in the labor market as a result of the pandemic, I highlighted the importance of workplace skills development programs. And so what we're doing this year, in the first quarter of this year, is going to launch a pilot project called Skills Up Net Philippines. And it draws on a pilot project we did with the tourism department 5 years ago. It also draws on the experience of the Irish Skill Nets scheme. And so essentially under this pilot, it's a competitive matching grants funding scheme. Employers in a priority sector and location would be encouraged to establish a network of at least 10 enterprises. So it could be, for example, 10 enterprises in the construction sector in a particular location. They would formalize that network through a MOU, and then that network would apply for a grant on a competitive basis. And the grant would be for short-term training of employees that belong to enterprises in that network. We've identified 5 priority sectors for phase 1 of this pilot. We hope to have phase 2 in 2023 and then phase 3 in 2024. These are agro-business, construction, ICT, focusing on animation, tourism, and we're going to have a special one on women's enterprises. We selected these these sectors either because some of them are struggling because of the pandemic, but some of them, but still have long-term positive growth prospects. And some of them, of course, have very good promising growth prospects over the medium long term. So our phase 1 of the scheme will be launched in the first quarter of this year. We have funding to provide somewhere between 5 and 7 grants, or grants to 5-7 of these networks. We're just finalizing the locations for these grants, but it'll be a combination of Metro Manila, Cebu, Davao, Palawan, and possibly further up north. And we hope that we will expand the sectors and the number of networks in phase 2 in 2023. We will reach out to the private sector through the chambers over the next couple months to introduce this scheme and to inform the private sector, how do you set up a network and how do you apply for a grant. So we plan to do that starting in February. We're now just in the process of producing the handbook for applicants, so that'll give all the information to enterprises that are interested. Now, I saw in the chat someone asked how do enterprises apply for it. So the idea will be, for example, as we did for the tourism sector a few years back, and again we'll focus on the tourism sector, we will identify a location, and we will reach out to the tourism sector, chambers, business groups. We will provide, we'll do some virtual and hopefully face-to-face workshops, and we'll introduce the scheme and we'll explain how to apply for it. But essentially, at least 10 enterprises should get together. They could be, for example, 10 hotels, but it could be a mixture of hotels, tour guides associations, etc. But let's just hypothetically say 10 to 20 hotels get together in a location. They just they use a template for memorandum of understanding that they would sign among themselves to say, we're going to form a network. We're going to nominate one of the enterprises to be the lead, and they will be responsible for submitting the application. We will have a particular date when we open up applications. That network would submit their application just following a simple template. That would then be reviewed by an awards committee, scored, and the top scoring applications will then be awarded a grant. We aim to ensure that each sector receives a grant. And we hope that we'd be able to award the grants by July of this year. And then the network has 12 months to complete that, the short-term training. The idea behind this is that the network has autonomy in terms of developing the areas that they want to train their workers. They would develop or identify the curriculum. The network would also hire the training providers. So you can hire them from a TVET institution, or you could hire them from the industry, or you could hire them from offshore, from overseas. So there's going to be autonomy on how the network, they should do a training needs assessment. They identify the areas for training. They identify the curriculum. They identify and recruit the training providers. So it's really about having an employer-led skills scheme. The role of the public sector in this case is to provide financing, but not the training. That would be under the autonomy of the network. So that's really kind of briefly how it's going to be implemented. But we will reach out to the different chambers over the next couple months to explain the enterprise, this funding scheme and how to apply for a grant. In the next slide, I think that's where I finish. Yes, and here, if you want to know and follow more about ADB, ADB Philippines has a Instagram account. We also have a Facebook account. So I do encourage you to follow us, because we do often share information on what we're doing in the Philippines, the programs and projects we're doing, etc. I will finish there. Thank you very much.
Thank you so much, Kelly. This was an excellent presentation from your side, very inspiring, and I think we are looking forward to 2022, and hopefully not with too big impact from Omicron, but let's see. I think the Philippines is a pretty good place now with vaccinations and everything as explained by you as well. All right, thank you so much. Let me now call on our second speaker for today. This is Jonas Ravelas. He's first Vice President and Chief Market Strategist of BDO Unibank. He provides analysis on financial markets and microeconomic developments in local and foreign markets. He has held the same position as Equitable BCI Bank's Treasury Department from 1998 to 2002. His prior experience also includes working as strategist, analyst, equity dealer, and portfolio manager in both money management and institutional equity brokering with DBS Securities and ACE Securities. Jonas has been educating investors in trading strategies and corporate governance, having worked in financial markets for more than 20 years. He has delivered numerous lectures in the field of forecasting, investments, and corporate governance here and abroad, and regularly provides economic commentaries in the Asian Wall Street Journal. He's also a regular commentator on economics and financial markets on ANC, Bloomberg, and CNN Philippines. Focus Economies ranked him as the #1 current accountant forecaster for the Philippines for 2015. He's also a lecturer at Ateneo, BAP's Treasury Certification Program. He holds a bachelor's degree in management of financial institutions from the De La Salle University. Jonas, thank you so much for doing this with us. Looking much forward to your presentation and insights, and for the Q&A afterwards. Over to you.
Thank you. Good afternoon, everyone. Let me just share my screen. Oops.
Yeah, we can see it now. Thank you.
Okay, good. Okay, so I titled my presentation as Cautious Optimism. So where flowers bloom, so does hope. So this was uttered by First Lady Bird Johnson. So again, I guess from the last time we had the briefing, and let me just share what we were thinking at the end of 2021. Then we were looking at the peso at 49.50. We know that the peso's weekend was low as 51 by year end, and at that time our forecast was 50.70. Although our growth rate for this year was really looking at 6.5%. So it's still a fragile recovery, but as we try to understand 2022, things have eventually changed. One of them, of course, is Omicron, but we're still looking at a very positive growth rate of at least 6.5%. That is our base case, which I'll be talking about. We're still focused on looking at average inflation to be around 3.3% for 2023. Core inflation in the Philippines is still between the 2 to 4% of the central bank at 3.3%. And that's why we think the central bank will keep accommodative policies. The previous speaker highlighted this as well. However, we are seeing some adjustment in domestic interest rates as government will continue to borrow to fund its deficit. So we're probably going to see interest rates slightly moving by between 25 to 50 basis points in 2022. We've seen a sudden shift in the peso since it closed at 51. This accounts for the faster pace of tightening in the US. That's why we're looking at least 50 to as a year-end target. And our expectation for the stock market is quite bullish at closer to 8,000. So what's driving this? So first of all, ominous Omicron. So these new variants tend to complicate the world, including the Fed. I guess when we look at the US and Europe, you're actually seeing a much better stance in Asia compared to in terms of the 7-day rolling cases. When we look at Asia as a perspective, and particularly the ASEAN, in the fourth quarter of last year, we saw the Philippines actually doing better with the low cases. Surprisingly, with Omicron, the Philippines now is the new hotspot in the ASEAN, overtaking Vietnam. But look at other countries like Indonesia and Malaysia that are still able to keep the cases low. To a certain extent, Thailand is slowly rising. But just the same, it seems that a lot of people continue. And in terms of vaccination, when we look at the Philippines, we're seeing a quite very positive number in terms of fully vaccinated. So these are basically comparatives against the region. So as the previous speaker highlighted, we're seeing a better traction on the vaccination, which has greatly improved confidence. And this is one of the things that continue to support the for 2022. So as we try to head toward normalcy, these are comparative 2020, 2022, and 2020 in terms of retail, recreation, and transport. You will notice that the way we're behaving is that, again, very similar to in the past, that when there is an MECQ, so transportation and retail have slowed down. But again, one of the things to consider if we were to look at 2021 in the fourth quarter, we've actually slightly moved up to pre-pandemic levels and eventually only to fall below in 2022. But actually, these are good signs because people are creating or actually are more confident in going out, especially with the vaccination. So as long as people are able to follow the minimum health standards, I guess people can continue to normalize. And again, when we look at residential and workplaces, as we move to 2022, people are starting to initially go to work because of the acting Omicron infections. We're seeing people scaling back, working back at home. But hopefully, we get over this towards the second half of this year, which again, driven by hopefully the lower infection cases, and that can only happen by further vaccinations. So I think that the key thing that people are waiting for that could probably drive growth is the chain of demand. Aside from expectations of lower infection cases as we move to the fourth quarter of 2022 or the second half of the year, there's also a continued expectation that inflation could be coming down. And most of the expectations, particularly from the December inflation at 3.6, continue to point that it appears to be topping out, and probably over the last 5 months, inflation has been coming down well. So that's actually a good sign on the part of the Philippine Central Bank to continue to keep accommodative rates. I think it's really more going to be pandemic management that will eventually help consumers slowly go back to normal to their spending, plus job growth. So the latest survey by the central bank continue to highlight at present, still confidence remain low, but over the next 3 to 12 months, people are quite optimistic. Even business is actually looking at a more positive note, particularly for the second half of 2022. Again, these are primarily driven by the execution of more government infrastructure projects, especially after the ban in terms of government spending during the election period. Now, when we look at the Philippines as of the third quarter, growth in the Philippines eventually played a catch-up role in the ASEAN recovery race. We're at 7.14% as compared to other countries that are neck and Philippines like Singapore. So again, we're playing a catch-up role, and hopefully we're able to maintain this. And this was the expectation in the fourth quarter. And hopefully in the second half of the year. So probably we could see a tale of two halves in 2022. Maybe the first half is built with uncertainties, but the second half will most likely see certainty. So I think one of the things that is something that we need to confront is that inflation may not necessarily be transitory, especially when there are a lot of issues with the supply chain. So this is something that I guess we will try to see in the first half, how these issues can be mitigated, especially with the risk of the new variants, which has eventually deterred increased production and eventually delays in the shipping lanes, which has eventually also caused the Baltic Dry Index to rise. And the rise is quite fast because people want goods sent to them at a faster rate. Now, what is challenging in the Philippines, among the ASEAN 4, the Philippines has the highest inflation, whether we talk about energy, food, core, and headline inflation. So this is something that hopefully we're able to contain in this year, particularly in the first half. So what could possibly go wrong in 2022? Number one, new various variants. Second, inflationary conditions brought about by, again, the demand, particularly from developed economies and those economies that are getting out of lockdowns. The third is basically the impact of geopolitics, whether it's driven between US and China, or US versus Russia, or something closer to home, concerns between the Philippines and China over the West Philippine Sea. Now, the other thing is that the overextended markets. Prior to end of the year, people were expecting the Fed to probably just raise rates between 25 to 50 basis points. Now, the Fed recently just made the statement that they could probably raise rates as early as March, given the fact that they want to contain the high inflation. Recently, December inflation in the US was at 1%, the highest since 1982. So again, the Fed is powering up for a fast lift. So from a November that's looking at just 25 basis points in 2022, that has eventually risen to last night's 4 hikes. So that is something that the market has still to digest, and that could eventually create the overextended markets, meaning higher interest rates tend to be negative to equity markets. Now, the policy headwinds. Again, this is something for the Philippine market, particularly for the BSP. So what you have here in red is inflation, which is slightly above the 4% upper end target of the central bank. However, core inflation is around 3.3%. And given the trend of inflation that appears to be heading lower over the last 5 months, then that could mean the central bank keeping rates accommodative for the rest of the year. It can. So barring any inflationary concerns, probably another African swine flu or disruptions in food, the trend in inflation seems to be on a downward path, looking at least 3.3 to 3.4% this year. Now, the other thing, of course, is the issue of the election. So we've seen that this alliance eventually is creating the BBM Sara Duterte tandem leading in the polls. So these are the contenders. Of course, the reigning vice president and the son of the former dictator appears to be neck on neck in terms of the elections. And in the surveys, they're the ones that are at the forefront. While there are other contenders, being the incumbent mayor of Manila, Isko Moreno, former actor as well. Now, these are the latest surveys, which typically over the past years, just a little bit of entertainment. In the Philippines, there are very important syllables in your name that can make you a president. So either you have the letters OS, as in Marcos, ON, as in Corazon, as in Corazon Aquino, or you can have a Fidel Ramos, like EL, in your name, then most likely you become likely the president. So that is a something to watch. But the recent surveys continue to highlight it's a neck and neck race. So this is actually a rematch between Vice President Leni Robredo and former Senator Bongbong Marcos. So typically the last survey of the year is actually a glimpse to what is expected in April. So we will see the next survey coming in late Feb or early March to probably see if there will be further changes to this. Of course, there are still issues regarding the disqualification of former Senator Bongbong Marcos. So what could go right in 2022? One, peaceful elections, and this is what we've seen in the past elections. After the elections, we see most of the economy moving higher. Again, especially now in the second half of this year, because there's an expectation of around 300 to 400 billion or 5.8% infrastructure spending for 2022. So that should eventually give a nudge to the Philippine economy. And given that signal, we could probably see the continued occurrence of this revenge spending. So a combination of all of this in the second half could really bring a 6.5% GDP growth in 2022. So for the property sector, and the reason why I'm looking at the property sector is that these are typically one of the sectors that people look at in a recovery, aside from banks, of course. Again, the faster vaccinations, the ramp up in office space, the essentials of the BPO sector, especially for those self-contained environments, and eventually the impact of discretionary spending like OFW remittances, which has recently been reported at 5.2% for the first 11 months of 2021. So that is very much supportive of the growth. So let me again summarize our view. We're looking at still a fragile recovery. Again, it could be a tale of two halves. First half is marked by uncertainty, inflation. Second, will the Fed really hike in the as early as March? And of course, the Philippine elections. But the second half, we'll probably see a better trend of Omicron. Hopefully, it's gone by then. Hopefully, inflation stabilizing at around 3.3%. In terms of interest rates, we're seeing just at least 25 to 50 basis point adjustments on the upside, which can bring the 10-year yields to around 5.1%. And eventually, the Philippine peso at 52, at least 52 by year end, taking into account a slightly faster pace of tightening. And if the infrastructure really materializes in the second half, then that could eventually prompt the stock market to go back to around 8,000 level. So what's what now? How do we ride this next wave of disruption? One is really appreciating our resources. So making sure that we have the ample liquidity we need to be able to continue our expansion plans. Know the risks ahead. Again, from a Philippine perspective, it's really all about the risks of inflation. Second is really about managing the pandemic. But despite all of this, it's really keeping ourselves focused on expanding our business. We can take this time to keep investing, look for bargains, another way of expanding faster rather than growing organically. The fourth is basically spending more but wisely. Again, consumption is the key as you try to normalize our day-to-day lives, and our most important tool, pray harder. So this is my last slide. Thank you.
Thank you so much, Jonas. This was very interesting from you as well. Thank you for doing this with us again and again. I really appreciate it. Can I ask Kelly also to join us here with video on, because now we're gonna start our Q&A. There's some questions from the audience already, but I have a few prepared questions before I go to the question from the audience. So audience, please feel free to ask more questions. Now is a great time to get some insights from these two gentlemen that are with us here on this Friday afternoon. Right, first question. So of course we cannot really talk 2022 without talking a little bit about the election and how it usually affects the Philippines. I think both of you were both mentioning it, but not really putting that much emphasis on it. This is my first election to be here and experience it, but from the past experiences, what people have told me, it has a huge impact on the economy. How do you see, is it less this year, or how do you really see the impact, and does it really matter who will win? Maybe Jonas, would you mind providing a perspective on this first?
Okay, I think mainly because of the activity of the elections, it will generate a lot of consumption. Meaning a lot of people, most of these candidates will go out, spend, try to meet as much people, talk about their plans. So most likely that could create spending. But given this pandemic, it might be difficult, and it won't probably be the same spending that we've seen in previous years. But I can be wrong. Over the last Christmas season, we've seen a lot of candidates going from town to town, and as if it's not a pandemic. So again, some people are starstruck in going to these activities, but definitely the spending will be less. I think what is really key, as I mentioned earlier, is really the peaceful transition of power. So once we eventually get that, and if we were to look at the gauge of how financial markets would move, definitely between a 3-6 month period, you actually see a lot of activity. Meaning there's a positive impact on the currency and eventually the equity markets. And for some who have long been in the Philippines, they know that any presidential election is the beginning of a new investment cycle. So we've seen this in 2016. So this could be the same. So it's just a question of who will be the driver of this economy.
Thank you, Jonas, for your perspective. Kelly, would you have something to add to this?
Just 2 points. In terms of election spending, it may have a bit of a spike in spending, in the first quarter. But if you look at GDP for the entire year, we don't find significant impacts on gross domestic product in an election year. There's some deviations depending on the elections, but it's not a big, that in itself doesn't have a big impact. What can happen though is, whenever there's a new administration and they are making their new appointments, there's usually a period, that transition period, you might see a slowdown in public spending. So for example, so it's typically what might happen for a quarter. However, when we look at the infrastructure programs, a lot of them are already on stream and that are being implemented now. And a lot of the spending for this year is backing ongoing projects. So even on the public infrastructure spending, I don't expect to see significant slowdown in that spending as well. So overall, there are some, may have some impact on public spending in the second half, or at least for one quarter as the new government gets in place, but it's not too significant.
Thank you for this perspective to this. And I mean, we are foreign chambers, a lot of foreign chambers here on the call today. I have to ask about, something related to the Fdis. Do you see that greatly impacted and people maybe waiting for the election and seeing what's happening, or what's your perspective on foreign direct investments? Also, just now that we have recently the Retail Trade Liberalization Act approved, and of course last year with Create and everything. How do you see it, and for 2022 Fdis? Maybe Kelly, if you would like to go first.
Okay, I think what we've seen is, there's a lot of new legislation that's been introduced over the years, whether it's, as you mentioned, the tax reforms, the trade liberalization bill, a retail liberalization bill that's been enacted. We see that the Public Services Act has been deliberated in Congress, and that's very close to, it's gone to the bicameral deliberations. Same for the Foreign Investment Act. And once you get those two acts passed and enacted, along with the tax reforms, along with some of the other reforms like the competition law that was enacted several years ago, Philippines then has a very good investment climate. So I think that bodes well for foreign investment over the medium longer term. It's always hard to make predictions about a particular quarter or a particular year, but I think when you look at all these reforms that have been implemented, and also a relatively high quality labor force, I'm very optimistic about foreign investment over the medium long term.
Thank you, Kelly. And Jonas, what's your point of view?
Oh, well, I guess we've seen, as you know, we have an international desk, so we get a lot of inquiries, but most of the time in our previous experience, they would eventually try to get more information. So once they're able to get the necessary information, 6 to 12 months, we eventually get to see them coming. So that's something that I think will most likely happen. And maybe to a certain extent, they'll wait how this next administration will play. But for a few that have already been here, once they are comfortable with the things that they're hearing, then they'll continue their expansion plans.
Thank you, Jonas. Great. That's good to hear. I think this was two positive outlooks on it, and that's really good. And there's a lot of good things that have been implemented lately. Okay, the last question from my side before I take you to the audience questions. So we have a number of members that already now, well, for the last few months especially, have seen disruptions due to supply chain issues. Hard time to get containers to make shipments out of the country even, and also to import things. How do you see, and I think the outlook from most shipping companies is that 2022 will also be affected to a similar degree. How do you see that somehow impacting things? I know, Jonas, you mentioned on the inflation and different things, but maybe can you provide a little bit more insight on this?
Okay, so I guess the key factor really is that these delays are not just brought about by, again, one people. especially with the recent implementation of this transport, no vac, no ride, that could again impact particularly the food processing business, especially those that commute. So that could be another problem and could cause delays in the production. So meaning part of the impact of the vaccines, of the virus is really the disruption in going to production phase. Aside from that, environment, and this is what we've seen, a lot of delays in the shipping. So this has eventually created those issues. Now, local businessmen have eventually started partnering with PASIA. It's an association of supply chain. So they're trying to work together, come up with trying to look at where the bottlenecks are. So MAP and the other big and leading organizations in the Philippines have started to work at how to thaw this impact on the supply chain. So this is something that is still ongoing. Hopefully, I think a good example here is that in terms of rice and pork, so the importations were, the tariffs were lowered, suspended, and we've seen a faster way of importing them. So we've seen ease in prices. But again, that's just one measure. The key factor really is distributing these products all over the country. So that is also another, especially with this cold storage. So how do you move them as fast? So that's another thing. That's why it's still an ongoing process for the businesses and eventually the supply chain groups, organizations.
Thank you, Jonas. And Kelly, would you have something to add?
Just one point. What we've seen globally is inflation increase, much higher than what most expected. Philippines' increase in inflation is not out of line with those global trends, probably a little bit lower than what we've seen in some European countries, for example. And I think it's primarily because of those supply chain disruptions, in the global markets. I think with Omicron over the next 6 to 8 weeks, because it's highly contagious, we're going to experience high rates of absent in the workplace, and that's going to affect services, healthcare delivery, and again delay import-export processing. So it will have an impact over the next 6 to 8 weeks. But I think once that dissipates, we'll get back and supply chains restore or recover. We should expect to see inflation to dissipate.
That sounds really good. Let's all cross the fingers that Omicron behaves the same way here as it's been doing elsewhere in the world, where it slowly starts to seem like it's easing out already. Thank you for your perspective, Kelly. Now, I'll turn to the audience. There's a number of questions. I hope we can deal with all of them, but bear with us if we cannot manage all. Now, I'll just start here. There's a question from Granada Rufi related to actually both of your presentations. Could the data just indicate a rebound from a dismal 2020 and not really an improvement trend? Is it merely a normalization? What do you think, Kelly?
Yeah, so what we saw, for sure, what we saw in the second half of 2021, it's a rebound. We've seen, at least a recovery of 70% of what was lost in 2020. However, and that's normal, you have the rebound. But what we do see is, the economy still has some strong fundamental, strengths in it. What we expect in 2022, it's still part of the rebound. We're only going to reach back to pre-pandemic GDP levels by the second half of this year. But we do think that, with the way that monetary, the accommodative monetary policy, the spending on infrastructure, the rebound in household spending, we do expect that's going to continue momentum and growth. And so by 2023, we do expect economic growth to continue to be above 6%, going back towards its longer-term trend.
Thank you, Kelly. And Jonas, would you have some further perspectives?
Well, I guess similar to what Kelly said, yes, it's a rebound. And in fact, even how we labeled our view on cautious optimism, it's really all about gaining confidence. And it boils down to really the vaccinations and eventually individuals' perspective of trying to normalize. And that is dependent on one, inflation, meaning once people start being comfortable with the prices, meaning their jobs are secure, things are normalizing, then that would eventually bring back the flow of the chain of demand. If we don't get to see that, then that is something that could really create the, well, we can really say it's a rebound. But the way people have behaved in the fourth quarter, especially those that are the young ones, that they felt that, the cases are down, it shows their confidence to go out. They're willing to take that risk despite the rising cases. Take that risk. So it's a question really doing more of these vaccinations, especially educating those unvaccinated to get vaccinated.
Excellent perspectives, I think. Thank you, Jonas. There's here a question also related to our neighbors. So how are investors looking at doing business in the Philippines compared to our neighbors? Jonas, would you like to start with a few perspectives on that?
Well, I guess with the recent, again, in terms of we're starting to see a lot of potential businesses coming to the Philippines. Of course, in terms of setting up businesses, we're still quite slow, but we've seen a lot of improvements, more improvements of the recent laws, particularly retail trade. It eventually, I guess, one of the things that could really put the Philippines on the map for potential investors is the fact that the geographical location of the Philippines, especially now that we're talking about the supply chain. The Philippines could be a good manufacturing hub. Now that we're upgrading infrastructure, you might want to have a position in the Philippines so that it's easy to, if we look at where the Philippines is, whether you talk about China, you talk about Japan, you talk about Singapore, we're just less than 3 hours away. So we're able to ship to these areas at a faster rate. So the Philippines could actually provide that. We have the manpower and we have the skills to do it. It's just a question of really trying to fast track the way we do business in the Philippines, which since the last few years have started to trickle down. And most of in our experience, we're seeing more of the Japanese, the Taiwanese, the Chinese coming into the Philippines, particularly most in the ASEAN corridor. So this is something that is well felt in our international desks.
Thank you, Jonas. And Kelly, how do you see it, the Philippines compared to the neighbors?
It's always hard to make a comparison. About 10 years ago, we did a survey of investors, both domestically and offshore. And the question was, what does it take for them to invest or expand in the Philippines? And the particular way we did a survey was to present different bundles of reforms, and which ones would they prefer. And what was striking was things like infrastructure was really important to them. It was also quality workforce. It was also a broad but lower based tax regime. It was also making it easier to enter and set up business in the Philippines. But if you looked at a lot of the reforms that have occurred in the last decade, they're focusing on them. So we've got a good infrastructure program. We've got Congress that's now deliberating some really important acts. And I mentioned before the Public Services Act, which would allow majority foreign ownership in a number of sectors where they couldn't. I think that'll be a game changer for the Philippines moving ahead. And also the corporate tax rate now that's going to be much lower. So I think there's a lot of policies that are very pro-business and pro-investment. And as I mentioned earlier, I do think I am optimistic that over medium, long term, Philippines will be, will continue to be, improve its standing on the investment radar.
Yeah, I think what both of you are saying is that there is a big improvement in the infrastructure. It's also something that I mentioned to potential Nordic companies that want to go here, that if they learned about Philippines 4 or 5 years ago, it's actually very different today. There's huge improvement. But there is a comment here from Mr. Elmer Lapena, and he's saying he's hoping we see telecom infrastructure development outside Metro Manila. And I think that is really also lacking still. Not really a question to any of you, but just a comment, I think very valid one. There's a question from another, Mr. Elmer Mendoza. He's asking you, Kelly, specifically, but I think it makes sense to get the perspective from both of you. A little bit tough question. What 3 to 5 items should the Philippine government focus on for a better economic recovery or performance in 2022? Would you have a few items, that you think is really critical? Kelly, would you mind going?
Okay, so if I was going to put like short and medium term, short term is, continue the fiscal expansion and spending on public infrastructure. I think it has huge multiplier effects for the economy and it creates jobs. And continue the accommodative monetary policy. I think complete that legislative program, get those acts signed and enacted into law. Over the medium term, I think it's important to focus on skills development, replace skills development, improving TVET systems. I also think other areas of reforms, for example, apprenticeship programs, if they can be further reformed and modernized, and also in the areas of social protection, for example, developing a robust social unemployment insurance scheme, for example, where you can provide income stability for workers when they are in transition towards jobs. So I think that would be areas that I would recommend focus on. I think they could also focus on developing a growth strategy, identifying those future growth sectors as well that could help to drive longer-term economic growth.
Excellent recommendations. Thank you, Kelly. And Jonas, would you have something to add?
Okay, I think I tend to agree with the continued fiscal expansion. And I think this is something that, I think a good example, it's like a car that just stopped. After a 2-year pandemic, the battery has died down, and sometimes if it's a manual car, it needs a push. That's actually the fiscal expansion. Now, aside from that, is we need to be able to work on the E in ESG, which is the environment, especially with coal. We need to be able to address power, because if we're going to see the economy expand, then we need to have additional power. If we get foreign investments coming, then we need to have them. So that's the second. I think that's very important. The third, I think, is really how to address poverty and joblessness. And it could probably be more focused, particularly on education. So meaning, given that the Philippines has the sweet spot of demographics, especially those that are age 30 and below. And one of the key issues that Kelly mentioned was the ICT, particularly those on the creatives. And we have a lot of those creatives in the Philippines. So that, I think, can be well channeled, especially with this, in the call center business of the BPOs, the self-contained environments, which appears to be in some areas of the country, have established small call centers and have been getting a lot of new projects because of their, being self-isolated. They're able to continue without fear of Omicron or any variants, mainly because they're in a self-contained environment. So if we're able to focus on this, that actually helps create those potentials.
Thank you, Jonas. Very good point of view. And I don't want to dwell too much on the skill support net that you were talking about, Kelly. It sounds like very, very good, those grants that's coming up. And as you mentioned, in relatively short time, we will be able to inform more about it. So let's do it at that point of time. I want to dwell a little bit more on the energy side. And there's also a question about it. And I think you're both talking a lot about it. I know BDO, Unibank are doing a lot of things on sustainability. And of course, ADB, as you mentioned, Kelly, you are also supporting a lot of climate positive projects. Now, how do you see it? I mean, was it in 2020, we had the moratorium of coal plants that was signed by the president, I think. And now we are seeing more renewable energy coming in, but how can that development be sped up even more? I mean, there is a need for more energy. There's no doubt about it, right? And if coal plants are being phased out, which they should, I guess, then how do we speed it up even more? Jonas, would you like to come with a comment first?
Well, I guess one is that recently there was an IPO for a solar plant. So a solar farm. So again, really access to capital is one. I think the other thing at the moment, which the government have started to look into, is that given this ban and eventually the restrictions of coal export by Indonesia, there's a need for those still government controlled and owned hydro and geothermal to see how are we able to maximize use and slowly transition. So these are the things. And of course, look for incentives from the private sector to be able to expand this. And the only way really to get a lot of this potential is really tapping the capital markets. So I think in the next 10 IPOs that are coming, there are around 2 or 3 renewable companies that are eventually planning to list. So we're seeing a lot of this activity now.
It's a great development happening, and I think it's also somewhat driven by the fact that Secretary Dominguez is also heading the sustainability efforts, and his speech at COP was very inspiring, I think, and very ambitious. Kelly, would you have some extra comments?
Yeah. So, from the perspective of ADB, one of the long-term challenges, for the Philippines, but for many of our member countries, of course, is going to be climate change. It's going to affect agriculture. It's going to affect water security, etc. And so that is and that's going to require public spending, and new public spending on climate adaptation, mitigation. But it also requires bringing in new incentives to help reduce reliance on energy that is creating CO2 emissions and so on that are affecting climate change. So ADB, I think some of you may be familiar that ADB is now looking at a what we call the energy transition mechanism, where we are working closely with the Department of Finance and other stakeholders on looking at developing. We're currently doing the feasibility study, but we're looking at developing a financing mechanism or facility where both the private sector, primarily private sector driven, would be able to buy out coal plants and promote those early retirement of coal plants. So it's really about developing a financing mechanism for that, both a public-private sector initiative. Where we're in that feasibility stage, we hope by mid-year we would have more flesh to how that mechanism would work. But the idea would be to work with the private sector to help have an incentive mechanism that would allow early retirement of coal plants and greater investment in renewables. which could be geothermal, it could be hydro, it could be solar, etc. So it's about helping to reduce, to increase that mix of renewable energy. But I think that is going to be a critical issue facing all governments everywhere over the next 10 to 15 years, given the impact that coal power plants are having on the environment. So I think that's going to be an area that would certainly be working with governments and the private sector over the next several years.
Thank you, Kelly. Just a very short, brief comment to you. It's related to this from you. So next month we are expecting to do an event on related to this, that companies now can choose where they will get their electricity from. How do you and obviously that's number of companies, they will do that and choose we want from a windmill or some other renewable. How do you see that as helping drive this development? Very brief from you, Kelly.
Okay, that's a really good question. I think ultimately it's going to be about corporate awareness on the environment and climate change. If you have corporates that are now choosing their sources based on the climate, that'll be an incredibly powerful mechanism for shifting towards renewable energy. And we see that in Europe as well, and in other countries where there is a strong demand from consumers for sourcing their energy from renewable sources. So I'll be very interested in that event next month.
Thank you. And Jonas, do you see how do you see the impact from this?
I guess that will actually be a good, for consumers and big companies, these are actually good. I think one of the things before that to probably materialize as well is just to add from the previous statement that I made earlier, one thing to add is the fact that we need to link Luzon to the Visayas Mindanao grid so that we can have a power. We need to be able so that you have a lot more choices. But right now, since Luzon is isolated, we need that link between Visayas and Mindanao so that if something happens to Luzon, you have the VisMin. Right now, although the power barges are there, which are more costly, but if we were able to link VisMin, and since they have less power demand compared to Luzon, then that could actually be a very good participation, and that could actually be very good for companies as well.
Excellent. Thank you, Jonas. Just gonna change the topic a bit. There's a question here on BSP accommodative monetary policy. If you think it will continue despite the forecasted inflation rate decrease in 2022, and especially with the election coming up, and how will this impact the personal and private company purchasing power? Jonas, would you mind?
Well, I think from the position of the Philippine Central Bank, given that the last 5 months inflation has been on a downtrend, and it seems that it's slowly going to their 2 to 4%, and most likely, and if that materializes, if that continues in the first half, they can still really keep the accommodative policy. In fact, they really need to keep the rates low as much as possible to support the growth. Now, I think one of the things to watch is that in 2018, core inflation went beyond 4%, around 4.3%. So that, I think, is one of the key metrics that I look at. If core inflation reaches 4%, then that could prematurely push the local central bank to start raising rates. So I don't think it's going to materialize at the moment. I think the first half should still bring inflation closer to maybe closer to 3.5, at least in terms of the average. In second is that there's still so much liquidity that is still available in the system. So that can actually allow the central bank to Again, they can still bring down the reserve requirements from the current 12 to single digit if they wish. So that will still keep accommodative policies. So I think if the Fed extends or do an early March, I think they can allow the peso to move to around 52.50. That could mean some pinch in terms of inflation, but I think the central bank is able to manage that volatility and still keep an accommodative policy. But again, for me, the key factor there is if core inflation reaches 4%, then that could mean a game over for accommodative policy.
Thank you for your perspective. Kelly, do you have something to add to this?
No, I think Jonas had covered everything on that. Yeah,
I think so as well. That was a very, very deep explanation. Thanks, Jonas. Thanks, Kelly. There's again a somewhat different question here with the recent relaxation on the mining, lifting of open pit mining ban and the processing of exploratory permits. Do you see a rise in mining activities, including precious metals? Jonas, would you mind to go first on that?
Yeah, well, there've been a lot of companies that have been waiting for this. A lot of local companies in the stock market. Every time there's a talk about, the mining sector, there's a lot of activity. It's just that the government hasn't really made a comment. Even the president hasn't really made much of the criteria for open pit mining. So this is something I think people are just, most of these investors are just waiting for the government to give the clear guidelines. And most likely this can come after, most likely the next administration. So we will probably see that materializing. I'm just assuming that, let's just assume that the Marcos machinery will win. Then in the past, they were able to work well on the mining sector. So they were pro-mining. So they know how to handle the mining sector then. And I believe even Lenny presidency would eventually allow the mining sector to prosper. So.
Okay, thank you, Jonas. And Kelly, what's you on this from ADB? Is it something you're involved in?
No, we're not involved in the mining sector, and I don't have. I think Jonas is kind of answered that one too, in terms of maybe clarity on guidelines will be important, and particularly the environmental impact that has, and also on the communities.
Excellent, thank you. There's one that goes back to the environment somewhat. There's a question: what about investment or infrastructure for carbon emission reduction? Do you have any, what should be done? What's going well now, Kelly?
Yeah, so I think always going to be critical for reducing emissions is investments in public transportation systems, and particularly railways. And this is something that ADB and the government of Japan have been working very closely with the Philippines. As I mentioned earlier, we are financing the Malolos-Clark Railway project, the South Commuter Railway project, and we also have the MRT4 railway. So I think, those, and they're all going to be electricity sourced or electrically powered railway systems. And as I mentioned, that whole north-south commuter railway project, the projections are that they could be carrying around 1 million passengers on a daily basis by 2040. That's going to have a huge impact on hopefully reducing the growth in cars or usage of vehicles and CO2 emissions. And when we looked at the feasibility studies of those projects, there were significant reductions in CO2 emissions. So I think that's going to be important, and it has huge benefits in terms of reducing travel time, safety, and improving the competitiveness of the economy. So I do think that's a first kind of step towards reducing carbon or emissions. There's also other incentives to help to do that as well through carbon trading schemes as well. That could also be potential ways of helping to reduce some emissions over the future.
Thank you, Kelly. Just a follow-up, just a brief one before I hand it over to Jonas and get his perspectives. Because I mean, I know the Danish embassy, for instance, the Dutch embassy, they have had a high focus on bicycling. Is that something you really, is it something ADB is involved in as well and making it more bicycle friendly in CR, for instance?
Okay, we do know that yes, the embassies that you mentioned have been doing work on that in studies, and the Department of Transportation is also looking at how to promote, how to create space for cycling. So it is something that we certainly support and providing technical support on. It's quite complex though, in the sense of, in a highly urbanized area like Metro Manila, it's not trivial setting up bike lanes, for example, on EDSA. So really, critical is going to have good public transportation systems, but you might be able to have cycling space in particular cities, in particular areas in Metro Manila. But it's not a trivial exercise, given that it's highly urbanized city. But there's going to be a lot of other cities and towns where that possibility will be much greater as well. But it certainly is an area that has a lot of potential in exploring and trying to find solutions for.
Thank you, Kelly. Jonas, some quick comments from your side?
I guess over the last 2 years, the word ESG has created a lot of noise, and most of the publicly listed companies have eventually looked into the sustainability in their companies. So I guess people are most of the companies are more aware and eventually have started to look into their sustainability initiatives within their companies. So I guess a good example would be SM, which at least 5% of our mall comes from green energy, from the solar in one of its malls, and slowly moving into the others. So I guess these are a few initiatives of other companies as well, as they try to improve their sustainability moving forward.
Thanks, Jonas. There's only 5 minutes to go. We are almost at the end. I have a few more questions listed here. If more comes in, we will not be able to entertain them, I'm afraid. And I'm not sure if we can entertain all of the last remaining questions. I'm going to go with 2 of them. Now there's a question here related to the pandemic and related to businesses. So in some countries, the government has supported companies financially. When there's been some lockdowns, has not really been the case here in the Philippines. There's the question basically evolves is, are there any data on the percentage of companies that had to close during the pandemic? Because I mean, we also know that there's a lot of small mom and pop shops that has opened, so the SEC registry is not necessarily that great of a guidance for it. Do you have any input on this? How has the Philippines actually managed this in terms of companies? Jonas, would you like to go first?
Well, I guess it's more of the business organizations, but again, especially for the SMEs, most of the organizations have done a lot of ways try to help ease the financial burdens. They've worked with DTI, especially with the Department of Trade of Industry, especially for the microfinance. So they've done with other other government agencies like SB Finance that will eventually try to provide 100 to 200,000 loans, which are again given on a grace period, just to, especially, of course, they need to go through a series of papers to be able to be given this. So I guess these are the two institutions that could probably give you more data on this. But again, the difficulty in trying to verify all of them at this point in time.
Thank you, Jonas. Kelly, do you have any insights on this?
Yeah, just, but it's always going to be difficult to kind of look at the data to say how much went to support businesses or workers. It's not always easy to do. At ADB, we developed a database where we tried to at least itemize different types of spending by country. What were the, in terms of monetary policy, in terms of liquidity or tax relief, transfers to workers or households. And if we look at that, lumping them all together, in 2020, I think the Philippines kind of assistance, COVID assistance, was equivalent to about 8% of GDP. It was actually relatively low compared to a lot of other countries who actually spent much more in terms of transfers or through tax breaks and so on. But if we look at some of the areas that the government had spent on, in 2020, they had a wage subsidy program, which was actually implemented extremely well, and it was a well-structured wage program. It was around $1 billion. For the size of the economy, that's probably, perhaps it should have been larger. If I look at my own country, New Zealand, they spent around $10 to $12 billion on wage subsidies, and it was, much smaller economy. And same for some other countries. But I think they did, resources are going to be, there's an opportunity cost to these resources. Where do you spend them? I think that wage subsidy program was very successful, but then the government also wanted to target households, and they did that through a very large emergency grants program back in 2020. And then they had other areas where deferred tax payments and so on. But I think overall in 2020, if those figures, that data is, if it's accurate, the Philippines, it was about 8% of GDP. It's quite significant, but it wasn't as large as a number of other countries in the region.
Thank you, Kelly. Thanks. We are coming to an end of this. I think there's one question that I've been saving a little bit. It's political, I'm afraid, but I still think it's very interesting. So what would your number one advice be to the future president of the Philippines? What should he or she focus on when elected in terms of stimulating the economy? Kelly, would you like to go first?
Okay, it kind of goes back to that earlier question on those 3 or 4 things that would be important for stimulating the economy. I think continue for now the fiscal expansion. I think that's going to be important for the same reasons that Jonas had mentioned earlier. I think there's an importance to focus on infrastructure. And it's important to focus on some of those transformative infrastructure projects, because they are the ones that do have a transformative impact on the economy and job creation. I also think that focusing on skills development is going to be important, and improving on social protection. I also think climate change is going to be an area that they'll have to focus on, and they'll have to spend on as well over the longer term. There's a big list, but those would be the first set of items I would suggest.
Thanks, Kelly. We'll try to phrase it into one sentence and send it to them. Jonas, would you have, if it's one thing or maybe two, what would it be?
Well, I think I'd actually just let me just give you the three letters. BDO.
Okay.
One is build infrastructure, develop social capital, and eventually focus on opportunities to seize. I think you in Kelly's slide highlighted not just transport, but again, we need to be able to do a balance of agriculture and eventually the manufacturing part. And I think the other one is really basically about on the talent skills. So again, you can have that in three letters: ATM, agriculture, talent, skills, and eventually manufacturing.
Excellent. Thank you to both of you for this, so many insights provided. I think we are all off for easier 2022 with all of these insights on the outlook for 2022 here in the Philippines. Really appreciate it. I think now we only have left to thank everybody for joining. I especially would like to thank, of course, our partners in this event today, from all the different chambers: Advantage Austria, British Chamber of Commerce Philippines, CCI France Philippines, Dutch Chamber of Commerce in the Philippines, the German-Philippine Chamber of Commerce, the PISM, the Philippine-Swiss Business Council, La Camara, meaning the Spanish Chamber of Commerce in the Philippines, and SEIPI. Thank you so much for partnering with us on this. And then, of course, a huge thank you to our two speakers today, Jonas from BDO Unibank and Kelly from ADB Asia Development Bank. Thank you so much. Maybe